Welcome back, folks. Welcome. Greg Silverman here, Chief Investment Officer, for another session of Come Learn with Me. This is a learning session. Every week we take a look at the articles which we curated, which did well, people liked and shared, and we read them together to get a sense. I enjoy reading them as well. It's the second time I read them, and you can always get more research, more intelligence out of it. If you'd like to know more about our investment programs, take a look at some of the links below. And yeah, there's some very interesting LinkedIn mini groups, which people like a lot. And they've got a lot of the thematics. I've once been called the ARK, ARKK, the ARK of LinkedIn groups. Okay, mini groups. Let's check out this one. Investors place inflation bet on US farmland. We featured a farmland manager on our looking over the manager's shoulder program. There may be a link down below to that series. I think it was CERES. Investors are buying more US farmland in search of a hedge against inflation as commodity shortfalls caused by Russia's invasion of Ukraine drive world food prices to record highs. Land values in the Midwest grain belt have gained 25 to 30% in the past year, while auctions draw intense bidding for available ground. Demand for land has picked up in the past month as the war in Ukraine and financial sanctions on Russia curtail critical exports of wheat and corn from the Black Sea region. The UN's World Food Price Index in February rose 24% from a year earlier. Interest in the asset class has never been this high before, said Bruce Sherrick, a professor of farmland economics and director of University of Illinois TIAA Center for Farmland Research. In the Midwestern state of Iowa, which restricts corporate ownership of farms, the buyer pool last month consisted of 35% investors and 65% farmers, according to the Realtors Land Institute, compared with 18% investors in 2019. Wow. The price of Iowa farmland rose by a third between March 21 and March 22. Big institutions have, there's the thing about inflation, it's not gradual, it's like a step change. Big institutions have long pursued farmland, led by fund groups such as TIAA and public pension plans, but institutional investors own only 2% of the $3 trillion US market, according to industry estimates. More than 40 funds have raised $8.7 billion in the past 5 years to invest in farmland, according to Preqin. Retail investors are able to buy into farmland investment trusts such as Gladstone Land, whose shares have doubled over the past year, and trade under the ticker LAND, or Farmland Partners, which is up 21% over the past year. Our investor education team cannot answer all the calls they are receiving. It's been difficult to get to the backlog of inquiries, said Carter Malloy, the founder of Acre Trader, a firm that enables retail investors to buy stakes in farms. As land prices rise, competition for available farms has intensified. Investors are having to look harder to find attractive REIT ground. We're walking away from many more aggressively priced farms now, said Artem Milinchuk, founder of farmland investment platform Farm Together. Higher land prices in some cases outstrip farmland's earning potential, leading income returns to investors to decline in recent years, according to Nuveen Natural Capital. But total returns, which also include price appreciation, have been strong for annual crop land. They were 11.1% in 21, according to Farmland Index, which tracks holdings of investors including Gladstone, TIAA, and Prudential. In the Midwest, the most mature and liquid US farmland market, investors are paying high land prices at a time where farm input costs such as fertilizer and diesel are going up, said Craig Wichner, the founder of Farmland LP, an investment fund that owns more than 200 million in land and raised more than 130 million in March. Small manager. The worry is they're investing into office buildings right before COVID, which said that 70% of US farmland is set to change hands in the next 20 years. That would be demographics, I assume, according to the US Department of Agriculture. And institutional investors are poised to gain a bigger share of old farmers retire. John Robertson, a fourth-generation soybean and corn farmer in central Illinois, said more investor involvement could prove valuable. I'm not going to buy $20,000 per acre farm ground. Good Lord, he said. Land prices have jumped in the last years. If there's an investor who wants to do it, perfect. Let them take on the risk. There's some bathing suits. Okay. As I said to you, we featured a farm manager. Our investors did really well with that one. couple of a year, probably even a year and a half ago. It's on our Looking Over the Manager's Shoulder program. So if you look at the links down below, you should be able to see a link to that as well. So hope you enjoyed this, and stay tuned for another riveting series of Come Learn With Me. Please like and subscribe. Greg Silverman out for now.